Yes, now Rick Riede, Managing Director and BlackRock's Chief Investment Officer of Global Fixed Income and Head of Global Allocations. The firm manages, of course, $2.2 trillion in fixed income assets. Rick, great to see you. Thanks for joining us. I guess I wanted to start by what you've made of the actual data in recent weeks and months, in particular the jobs numbers last week, and whether in any way that does justify the huge rally we've seen in stocks.
So I think it's part of it. I think, by the way, I think the stock market is, people consider the stock market the same as the equity market. What's actually really different is the stock market reflects much more of a technology orientation, healthcare orientation, et cetera, than the actual economy. But the economy's been strong. On a relative basis, when you think about where we stand with regard to the virus, you look at the employment numbers you said. The rate of recovery is impressive, and the breadth of where it's coming from. We were very impressed by things like the leisure sector, et cetera, that was coming back quicker. But then you look at today, the non-manufacturing and ISM data that came back, new orders were strong, business activity was strong. And you see employment is coming back, but still it's going to take a longer period of time. But, I think across the board, whether it's car sales, whether it's some of the trucking data we see, economy, it's obviously had a burst of tremendous fiscal stimulus and obviously the monetary policy, but it's pretty solid in terms of recovery and somewhat mimicking the impressive data we've been seeing out of China the last few weeks.
So clearly, though, some of that has been priced into certain sectors of the stock market. Where can you still find value, Rick? Is there any sectors in the U.S. or perhaps internationally that stand out to you?
So I'd say domestically, I still think it's hard, as you said, to see in the NASDAQ hit a record. It's hard to envision that you keep going given how much you've moved. That being said, I also think, I know I've said this on this show and others, I still think we're going through what is a remarkable period of time with technology changing the evolution of how commerce works today and the scalability you're seeing that industry and companies within it can create. I still think there's upside there. I still think there's upside in the consumer discretionary data, parts around housing, et cetera. I think there's real upside. And for the first time, I think I said this for the first time in 10 or 20 years, I actually think that Europe is a place to invest and to diversify your portfolio. Actually, look at the virus data. It's better in Europe. The Eurozone Recovery Fund is kicking in, so you're actually getting what is a mutualization of the debt and real fiscal stimulus for the first time in a long time versus just monetary policy. So, parts of Europe, I actually think we were doing more of that today in terms of diversifying more of the exposure into Europe, which I can't even remember the first time I said that.